All right, everyone, welcome back. Ready for another deep dive.
Always.
Today, we're landing right in the middle of the action. November 6th, 2024. Election results are fresh out the oven.
Still warm.
And we've got this financial market briefing hot off the presses.
Oh, yeah.
It's like we're peeking right over the shoulders of Wall Street analysts.
Right into the war room.
Seeing how they're reacting to all this in real time.
And you know what makes this one especially juicy? This briefing goes all in, boldly declares Trump the 47th president.
Yeah, I definitely did a double take there. But that's what we do in these deep dives, right?
Absolutely.
We don't get bogged down in political debates. We're here to figure out what this unexpected outcome, well, what it could mean for the market. It's all about those knee-jerk reactions, those predictions flying around, and how all of that actually translates into real-world economic impacts.
All right, think of it this way. We're not just looking at numbers on a spreadsheet. We're trying to understand the psychology, the mood of the market. What are investors thinking right now? What are they expecting? How are those expectations shaping their decisions? Because those decisions, they make things happen.
They really do. Okay, so let's rewind the clock back to last Friday, November 3rd. Things were looking pretty good, right? Across the board.
Yeah, cautiously optimistic, I'd say.
S&P 500 was up over 1%. Closing at 5,782, the Dow Jones was hot on its heels, gained almost a full percentage point, ended at 42,221. Even the tech-heavy Nasdaq had a decent gain, finished at 18,439.
We were seeing broad optimism, then boom, election results hit, and things, well, they took an interesting turn, especially for the Russell 2000.
Yeah, the Russell 2000, for folks who might not know, tracks those smaller companies. The ones focused more on the U.S. market, and it just, well, it went on a tear.
Like a rocket.
Surged almost 2% to close at 2,260. So the big question is, why? What's fueling the sudden jump?
Well, this briefing, it seems to point to a shift in how investors feel, tied directly to the election results. And one of the biggest trends we're seeing, the financial stocks, they're soaring.
Okay, so let's break that down a bit. Why are financial stocks suddenly everyone's darling? What's the potential upside here?
Well, the thinking goes like this. A Trump presidency, it probably means deregulation.
Less red tape.
Music to the ears of many in the financial sector.
Okay, so why is deregulation such a big deal for banks specifically?
Think of it this way. Regulations, while important, they can also add costs for businesses, especially for financial institutions.
Right, all that compliance paperwork.
Exactly. So looser regulations, they can mean lower costs, more flexibility in lending, and potentially bigger profits.
So like a collective sigh of relief from the banking industry.
Yeah, something like that. And this briefing, it even hints at possible tax cuts, which could boost profits even more.
So the million-dollar question is this a temporary high, a sugar rush, or are we looking at a long-term boom for the financial sector?
Time will tell.
Time will tell. All right, finance is feeling bullish, but what about our friend crypto? Bitcoin and Ethereum, they didn't exactly sit this one out.
No.
Bitcoin jumped over 6.5%, hit $73,894, and Ethereum, not too far behind, gained over 8%, reached $2,619.
Interesting to see, right? Especially with all the talk about crypto regulations.
Right, makes you wonder if this is, what is it, the flight to digital safety?
Exactly. Are investors a bit spooked by potential volatility, political and economic, so they're looking for assets outside the traditional system, places where things might feel a bit more, well, stable.
Like seeking refuge in the digital world.
Right, and brings up a bigger question. How do these digital assets fit into the global financial system? You've got governments worldwide trying to figure out this whole crypto thing, how to regulate it.
And that uncertainty makes people nervous.
Of course. You don't know the rules of the game. You're hesitant to play.
Exactly. So you have this potential safe haven from traditional market chaos, but then there's this regulatory cloud hanging over it all, a real push and pull.
And speaking of uncertainty and regulation, let's look at the tech world.
Oh, yeah.
This briefing points to some potentially big impacts from Trump's policies, particularly when it comes to AI and electric vehicles.
Huge sectors.
Absolutely. Lots of speculation about how AI regulations might change under this new administration, and of course, the big question mark hanging over electric vehicle policies. This puts companies like Tesla, they're heavily invested in both those areas, in a rather tricky spot.
Yeah, Tesla's like the example, the poster child for all of this, according to the briefing. They could benefit from potential changes in trade, but at the same time face more scrutiny, especially given Elon Musk's close relationship with Trump.
Yeah, the stakes are high for Tesla. It really shows how political connections, well, they can add another layer of complexity and potential volatility to the whole investing landscape. But it's not just tech feeling the heat. Renewable energy stocks, they're taking a hit too.
Not surprising, though, is it? I mean, Trump's been pretty vocal about his skepticism towards climate change, so investors, they're probably bracing for potential disruptions to green policies, things like solar tax credits and those incentives from the Inflation Reduction Act.
It's creating uncertainty for the renewable energy sector, at least in the U.S. But remember, the transition to clean energy, it's a global movement.
Right. It's bigger than any one country.
Exactly. While changes in U.S. policy might slow things down here, they're unlikely to derail the entire clean energy train.
So, does this present a buying opportunity for those who believe in the long-term potential of renewable energy?
It's something to consider. There could be short-term turbulence, but globally, the demand for clean energy solutions, that's only going to go up in the coming years.
It's a good reminder that we need to think globally, not just focus on the U.S. market. And speaking of global, this briefing highlights Goldman Sachs' decision to lower their GDP growth forecast for the euro area down to 0.8% from 1.1%.
And the reason they give: potential tariff risks after the election. It shows how decisions in one country, in this case the U.S., can ripple through the entire global economy.
It's all connected. Okay, let's switch gears for a bit, look at some company-specific news that caught my eye. First up, we've got Invesco Ltd., big investment management firm.
Ah, yes.
They just released a disclosure about their holdings in International Paper Company.
These kinds of disclosures, they might seem routine, but they're actually super important for market transparency.
It's all about knowing who owns what, right?
Exactly. And sometimes these disclosures, they can signal shifts in investment strategies.
It's like peeking behind the curtain, seeing what the big players are up to.
Exactly. Now, for a story that's a bit more, how should I put it, in your face, let's talk about Funware. This mobile advertising company, their stock just exploded after Trump's win. And the reason: they were involved in building the digital infrastructure for the Trump campaign.
Talk about being in the right place at the right time. It really highlights how political events can create unexpected winners in the market. Sometimes it's not about the fundamentals, it's about riding the wave of a political victory.
Absolutely. But then there are companies addressing those pressing social issues. Take Novo Nordisk, for example. This pharmaceutical company, they're seeing a surge in profits because of the success of their weight loss drugs.
Which, on one hand, is great news for them, but on the other, reflects a pretty serious trend, the global obesity epidemic.
Bittersweet, you could say. It highlights how market trends often reflect larger societal challenges.
It's a reminder that opportunities can come from addressing these pressing social needs, even if they are unfortunately growing. Now, for a company facing a bit of a bump in the road, we have CVS. They reported a surge in revenue. Sounds good, right?
Sounds good.
But their profits actually took a hit because of this large reserve charge.
A reserve charge, just to clarify, is basically an accounting move where a company sets aside money to cover potential future expenses or losses.
Like a rainy day fund.
In a way, yes. In CVS's case, this charge seems to be linked to some legal settlements. But here's the thing: their stock, it actually responded positively despite the profit dip.
So investors aren't running for the hills.
No, they seem to be focused on the company's long-term prospects. They have confidence in CVS's ability to handle these legal issues and keep growing.
It's not just about the numbers themselves. It's about the story behind those numbers.
Exactly. Now, before we wrap up this part of our deep dive, let's touch on something that affects pretty much everyone: mortgage rates. They've hit a 3-month high, and this is happening right before the Federal Reserve's meeting, which is causing some ripples in the housing market.
Ripples. More like waves. Mortgage applications have plummeted. Looks like those rising interest rates are giving potential home buyers pause.
It's classic supply and demand. Higher interest rates make borrowing more expensive. That cools down demand, especially in sectors like housing, which are sensitive to interest rate changes.
So anyone thinking about buying a house right now, they have a tough decision to make. Do they jump in before rates potentially go even higher? Or do they wait and see what the Fed does? Big decisions.
Decisions. And a perfect illustration of how those big market trends we've been talking about, those seemingly abstract economic forces, well, they can have a real impact on our everyday lives and those big life choices.
Absolutely. It's all connected. All right, we're back and ready to dig even deeper into this post-election market mayhem. Before we got sidetracked by those company stories, we were looking at some major trends, right?
Right.
We talked about how finance seems to be celebrating, while renewable energy, well, they're battening down the hatches. And then there's tech, kind of stuck in the middle between opportunity and uncertainty.
Like walking a tightrope. And the whole market's watching to see if they make it across.
Good analogy. It's all about expectations, right? And speaking of expectations, I want to go back to that flight to digital safety we touched on earlier. With all this post-election jitters, are we seeing crypto emerge as the new safe haven? The place to park your money when things get shaky?
Ah, the million-dollar question. This briefing certainly seems to suggest it's a possibility. Remember, Bitcoin and Ethereum, they made some serious gains right after those election results came out, which hints that some investors, they might be moving their assets into those digital fortresses, trying to ride out the storm.
Looking for a place where things feel a little less influenced by all the political back and forth?
Exactly. But it's not just about seeking shelter. There's also the whole regulatory maze surrounding crypto to consider. Governments worldwide are still grappling with how to regulate this thing, adds another layer of complexity.
Okay, so let's unpack that a bit. How does this regulatory uncertainty actually impact the crypto market?
Well, imagine you're trying to build a house, but you have no idea what the building codes are. That's kind of what it's like for crypto investors right now. That regulatory clarity, or lack thereof, it can make or break investor confidence. And with crypto, where the technology is still evolving so rapidly, that uncertainty, well, it can be a major roadblock.
So it's a double-edged sword. On one hand, a potential safe haven from the chaos of traditional markets. On the other hand, you've got this fog of regulations hanging over everything, making some investors hesitate.
Exactly. That's what makes this space so dynamic and, honestly, so fascinating to watch. But let's shift gears for a moment and revisit that point the briefing made about the clean energy transition being more of a global wave, a tidal wave,
Yeah.
rather than something specific to the U.S.
Okay, yeah.
It's bigger than any one country, even if U.S. policies shift and create some headwinds. They might slow things down, but they're unlikely to stop the momentum entirely.
Right. Climate change, it's a global issue, and countries all over the world are stepping up to address it. The U.S. is a big player, but it's not the only one.
Exactly. And investors, they're savvy. They're looking for those opportunities in the clean energy space, no matter what's happening politically in any single country.
So for investors who aren't afraid of a little short-term volatility, this dip in renewable energy stocks, could it actually be a chance to buy low?
It's certainly a possibility. Like any investment, there are risks, of course. But for those who see the clean energy future as inevitable, this could be their chance to get in early.
All comes down to your risk tolerance and your long-term vision. Speaking of risks, let's not forget about the potential fallout from those tariffs we talked about earlier.
Right.
Remember, Goldman Sachs, they downgraded their GDP growth forecast for the euro area specifically because of those potential tariffs, that threat hanging over everything.
It's a stark reminder of how interconnected our global economy is. Decisions made in one part of the world, they can have significant impacts on economies all over the globe. Tariffs, in particular, they can really disrupt international trade, leading to higher prices for consumers, potentially slower economic growth overall.
It's like a domino effect.
A very apt analogy. It shows why it's so important for investors to keep an eye on the bigger picture, global economic trends, geopolitical events. What happens in Washington, it can impact things in Berlin, Tokyo, you name it.
The butterfly effect. Okay, before we move on, I want to circle back to that idea of market sentiment. This briefing really emphasized how investor sentiment, it can be this powerful force driving market swings, those ups and downs we see every day.
It's true. It can be very powerful.
It's like the market has a mind of its own sometimes, and it's not always rational, it's emotional.
Sentiment, it's often driven by perceptions and expectations, which aren't always grounded in hard facts and data. That's where things can get interesting and a little unpredictable, frankly. That's also where opportunities can arise for investors who can see through the noise, make decisions based on solid analysis, rather than getting swept up in the emotional currents.
So, as an expert, how do you stay grounded? How do you navigate those choppy emotional waters? What's your secret?
Honestly, I always try to remind myself that the market, it's a fickle thing. Moods can change quickly, sentiment can shift in an instant. Instead of getting caught up in the frenzy, I try to focus on the long game. Solid fundamentals, reliable data, companies with a proven track record.
Tuning out the noise and focusing on the signal.
Exactly. And speaking of signals, this briefing, it's packed with them. We've talked about the impact of the election on different sectors, the potential for crypto to become that safe haven, the global clean energy movement, that looming tariff threat, and of course the often overlooked power of market sentiment itself.
It's been quite a journey, hasn't it?
It has, and we're not done yet.
That's right. One more leg of the journey to go. We'll dive into those intriguing company stories, explore the wider implications of this surprise election outcome. So buckle up because this deep dive is about to get even more interesting.
Okay, we're back. Final stretch of this deep dive into the post-election market world. We've talked big picture trends. We've looked at how the market's feeling. Now let's zoom in on those company stories from the briefing. They really make it all come to life, you know.
They do. They really help connect those big market forces with the real world, how it impacts actual companies, and ultimately us as investors.
Exactly. So first up, Invesco Ltd. and that disclosure they made about their stake in International Paper Company.
Ah,
I know. Disclosure's not exactly the most exciting thing, but stick with me here because this highlights something super important about the market, transparency.
you're right. Transparency often gets overlooked. It's like the foundation of a fair and efficient market. These disclosures, even if they seem kind of routine, they give us this peek into who owns what, and sometimes they hint at bigger strategy changes. Like we get to see what the big players are up to behind the scenes.
Exactly. It helps everyone make better decisions. Now, for something a little more, well, dramatic, let's talk about Funware. This mobile advertising company, their stock just skyrocketed after Trump won, and you know why.
They were the ones who helped build the digital stuff for the Trump campaign.
Exactly. Talk about being in the right place at the right time.
It's a perfect example of how political events can create these unexpected winners in the market. Sometimes it's not about the company's performance, it's about being aligned with the political winds, riding that wave.
Absolutely. And it makes you think, are there other companies out there under the radar who are positioned to benefit from this shift? It's like a treasure hunt, right?
Totally. Okay, let's shift gears completely, talk about Novo Nordisk, the pharmaceutical company that's making headlines with their weight loss drugs.
Right.
They're seeing huge profit growth because of those drugs, which is great for them, but it also reflects a kind of troubling trend, the whole global obesity epidemic.
Yeah. It's a bittersweet success story. It highlights how market trends often mirror what's happening in society as a whole.
It shows that opportunities can come from addressing those big social issues, even if those issues are unfortunately getting bigger. Okay, now for a company facing a bit of a hurdle, we have CVS. They reported a big jump in revenue. Sounds good, right?
Sure does.
But their profits actually took a hit because of what's called a reserve charge.
Right. Reserve charges, they can be confusing, but essentially it's an accounting move where the company sets aside money to cover potential future expenses or losses, kind of like a safety net.
Okay, so like a just-in-case fund.
Yeah, something like that. In CVS's case, it seems this charge is linked to some legal settlements they're dealing with. But here's the interesting part. Their stock, it actually went up, even with the profit dip.
So investors aren't worried.
It seems like they're looking past those short-term issues, focusing on the company's long-term plans. They believe CVS can handle these legal things and keep growing.
They see the bigger picture, not just the numbers right in front of them.
Precisely. Okay, let's wrap things up with something that affects a lot of folks. Mortgage rates. Remember we talked about those rates going up, hitting a 3-month high right before the Federal Reserve's big meeting?
Yeah.
Well, it's causing some waves in the housing market.
Waves, more like a tsunami. Mortgage applications have dropped like a rock. Looks like those rising interest rates are making people think twice about buying a house.
Makes sense. When interest rates rise, borrowing gets more expensive. And that can cool down demand, especially in sectors like housing that are sensitive to interest rate changes.
So for anyone who's thinking about buying a house right now, talk about a tough decision. Do you jump in before rates maybe go even higher? Or wait it out and see what the Fed does?
Yeah, no easy answers there. It really highlights how all those big market forces we talk about, those big economic trends, they can have a very real impact on our lives, on those major decisions we make.
It all comes back around, connects in the end.
Well, I think we've covered pretty much everything in this briefing, from the finance world celebrating to the worries in renewable energy, the rise of crypto as that potential safe haven, the ripple effects of tariffs, and of course those company-specific stories, the ups and downs, the wins and losses. It's been quite a journey.
It really has. And like we always say, the key takeaway is to stay informed, stay curious, never stop learning about this market.
Couldn't agree more. And remember, even with all the ups and downs, the uncertainty, there are always opportunities out there. So keep your eyes peeled, stay sharp.
Absolutely.
That's it for this deep dive, folks. Thanks for joining us. And until next time, happy investing.